Breaking news comes from the Bank of Canada. It just announced its overnight interest rate decision. That is the rate at which the big banks can borrow money, but you know it trickles down to you and me, affecting everything from mortgages to car loans. We've got our business host, Scott Peterson, here. What's the number?
The big surprising news is a half a basis point, 50 basis points down to 1.25% from 1.75. This is a very aggressive move from the Bank of Canada just out moments ago at 10 o'clock. And this is beyond anything the street was expecting and a lot of analysts that I was talking to. So 1.25, and this is the first drop since 2015. It's also the first move in 16 months that the Bank of Canada has adjusted something here. And this, of course, follows the half a basis point emergency move by the U.S. Federal Reserve just yesterday that tanked the markets, and also by sort of a lack of movement yet by the G7. Remember, they met yesterday, and
the finance ministers, yes.
The finance ministers, they were just saying that they're going to monitor the situation. So clearly, it's being communicated from the central bank in the U.S. now to Stephen Poloz in Canada. Some of the wording is interesting as well. COVID-19 is front and center on this, saying that before the outbreak, the economy was doing relatively good. They now think that the first quarter is going to be a lot weaker than expected because of this. And even though it's a lower of interest rates, it is something. You know, it's not going to help the supply chain disruption, that parts are not getting somewhere or factories are still closed. But this is an attempt by the banks now that we're starting to see somewhat of a coordinated action around the world. But I want to read just this here. In light of all these developments in the coronavirus, the outlook is clearly weaker now than it was in January. As the situation evolves, Governing Council stands ready to adjust monetary policy further. So it's saying that they're willing to lower it even further should the economy slow. So a big move, a quarter point was what was expected, and this came down a half a point, 50 basis points.
And that takes some time to trickle down to, the rest of us in, regular, normal people land. But you're getting reaction from economists, from those who are watching this very closely. What are they saying?
Yeah, they're going to say that this is going to be an interesting move because part of the job from a central bank, whether it's U.S. or Canada or around the world, is to assure the public that everything's calm. So this might be seen as a bit of a panic move, you could say, quote unquote. But if we do take a look at the dollar, it is down, it's down. It had been positive, actually, so this is a real negative effect. Usually it's telegraphed, but because of that big reaction, it was up about a quarter of a cent, and now down. So this says that there's a bit of a shock that the Bank of Canada was this aggressive in lowering rates and making sure. Then the idea of lower rates means that people have extra money, that there's lots of money to spend, easier to borrow. So a big move by the Bank of Canada and widely not anticipated by the street.
All right, you'll come back. You'll look at the market numbers. We'll see what's happening on this Wednesday. Thank you, Scott.
Thanks, man.